You're watching the Crypto Market Update with your host, Chris Marshall. Your home for the latest crypto news, reviews, and updates that can be found around the block. If this is your first time here, then we would like to thank you for watching. If you enjoy the show, please like, subscribe, and share with anyone that you believe needs this type of content in their life. Just a reminder, anything discussed on this show is for educational and entertainment purposes only and should not be considered financial advice. With that out of the way, let's get on with the show.
Hello and welcome to today's crypto market forecast, where we take a look at the events that are coming up throughout this week that may have an effect on your favorite crypto. I'm your host, Chris Marshall, and not too exciting of a week. Pretty boring Monday, honestly. We got the holiday or whatever is going on. This entire building is dead right now. There's like no one here, so it feels like a very boring Monday. But before we dive into the show, let's hear a word from our sponsors. First up, we have Customerify, the easiest way to collect user feedback. If you have a website, your business relies on reviews or feedback heavily, maybe you're a martial arts school, a dance studio, something like that, your reviews are really the lifeblood of your business, restaurants. Go ahead and check out Customerify.io. You can easily set up your own campaigns within there that plug straight into your websites or email marketing campaigns, and it allows customers to give you feedback super rapidly, anything as quickly as simply hitting an emoji to answering a full questionnaire. So go check them out at www.customerify.io. Our next sponsor is OTEC, Ocala's Technology and Innovation Council. If you're into tech and in the Ocala area, you should definitely go ahead and look them up. They can be found at www.facebook.com/Ocala Tech Council or at otech.mn.co. That is their network. Go ahead and find OTEC. They hold events throughout the month for networking and education, stuff like that. And they are connecting the tech and innovative thinkers in Ocala together with businesses and organizations, the CEP, stuff like that. So definitely go check them out. All right, with that out of the way, let's move on to today's show, where we are going to be looking at some different stuff going on. So first up, we're over here on coinmarketcap.com. If you're not familiar with CoinMarketCap, it gives you a pretty good basic overview of basically everything happening within crypto. So starting up here at the top, we're at just under 20,000 cryptos live on CoinMarketCap. Getting real close to that 20,000 number. The total market cap of the entire crypto industry is sitting at $905 billion, with the 24-hour volume being at almost $80 billion. And let's see, Bitcoin dominance sitting at 43.3%, with ETH at 15.2. Last week we were at a 14.3, 14.5 ETH dominance, so interesting. 26 Gwei ETH gas, look at that. That is pretty cheap gas fees right now. So if you need to do some transacting in ETH, you might want to do it right now. Pretty cheap. Let's take a look at some of the top coins. A lot of stuff is up for the day over the last 24 hours. And of course, still majorly over down and in the red over the last week. Bitcoin's up almost about 5.5% today. Ethereum up almost 9%. Getting to that 1150 number, that's very interesting. And then let's see, anything particularly going nuts on the, wow, look at that, Solana on the week. In the last 7 days, up 33%, and on the day, 11%. That's a pretty good raise. We had that major fall happening on Sunday and Monday last week, so we may have seen the bottom last Tuesday, Monday, Tuesday time. It's hard to tell exactly just based off the 7-day thing. We need to go back and look at the charts. We'll do that here in a minute. Anything else majorly standing out? Let's kind of go down to about the top 50 coins. Helium up 44%. That would have been a good thing to buy, kind of in the dip of last week. Maybe about Tuesday would have been a good buy. And yeah, a couple other things up a decent chunk since about last Monday afternoon, Tuesday time. So, all right, let's move on over to the Crypto Greed and Fear Index. And if you're not familiar with the Crypto Greed and Fear Index, basically it's an indicator that people like to use to determine when a good time to buy and when a good time to sell might be. The general consensus or thinking is that when the market is overly fearful, that may be a good time to buy. And when the market is overly greedy, that may be a good time to sell. So we are today in extreme fear at 9. Yesterday we were at a 6, and last week we were at 11. Last month at a 13. So very interesting. We have been in extreme fear for quite a while. There's a period quite a few weeks ago where we got into like the 25s, 30s. I think maybe we even saw a 50 one day, something like that. So, but other than that, we've been in fear since like November, if I remember correctly, for the most part. So interesting. Use that at your own discretion. Let's take a look at the charts. All right, so we are on this chart that we've been looking at for a while. So what I have drawn out here, if you're new to the channel, is this correlation that we've been looking at, basically trying to determine what could be happening. And we had seen that we formed this bearish flag pattern back here off of the all-time high back in early 21. And if we were to have completed that bearish flag pattern, we should have ended up with about a $12,000 Bitcoin, somewhere around in there. Fast forward to the all-time high back in November, we formed another bearish flag pattern. And there's two ways that we could have drawn out the flagpole indicated by the blue and green lines here. When we completed the actual flag, the two flag poles copy and pasted would have ended up in between this range. And one of the things that we were interested in was, were we going to hold this $28,000 support level like we did last time? And well, obviously we did not, since we were far underneath it. But that's where this green flagpole would have put us at, is about that $28,000 level. And we did hold it for a little while, but we ended up breaking down below it. So what we have instead is, now we have this larger flagpole indicated by the blue. That tells us we should be back at that $12,000 level, or that's what we should be going back to. In addition to that, since we fell out of that major flag pattern, we formed yet another one, and you could draw out the flagpole a couple different ways. I have it indicated here with a purple line, since it is a shorter time period flagpole or flag pattern. And if we were to move that down, this purple box indicates where we should fall, which is roughly between $18,000 and that $12,000 level. And well, last week we did hit it. I believe that was on Saturday is when we actually hit it. We'll zoom into the daily here in just a minute. And since then we came back up through yesterday and are sitting about $20,000 now. So if we move over to the 1 day time period, yeah, you can see Saturday we fell down and hit that, and then we climbed out of it on Sunday. And that's basically where we're at now, as we are waiting to see what's going on. So if we move on over to our other chart, we can see where we are on our Fibonacci's and our weekly and monthly support levels. So remember, this $20,000 level would act as a natural support level, since that is where our all-time high went back in 2017, 2018 time. And so we should have expected some nice support. This is also where we hit some good resistance on our way up back in the end of 2020. So we came down, we hit this level, went underneath it, which wasn't too big of a worry, and then we came back above it. Now, in addition to that, if we were to draw out our Fibonacci retracements, that also kind of, this $20,000 level also coincides with that 80% drawback. And interestingly enough, at 20, $2,000-ish is where our 200 time period moving average ends up at. So we have this nice little purple box where we should find some pretty good support within this purple box between $22,000 and $20,000, where we're underneath. Right now we're underneath this 200-day moving average, which is not ideal. Ideally, we want to get back above there within this week-long candle, and that's one of the first things that I'm watching, is can we get back above this 200-day moving average and close above it. Ideally, I'd like to see basically the inverse of this candle, just a nice solid green body all the way back up to about $26,000. If we could see that, that would be a pretty good, strong indicator that, this was a good sign of a bottom. So that's number one. Let's move on over to the monthly chart and see where our 50 time period moving average is. So you can see that our 50 time period moving average this week was sitting at 21,324. So sitting about, to close above that, we're going to at least need to get back above the 21.5 probably, is where we're going to want to be. So if we can close this month of June out within the next 10 11 days, something like that, 10 days, if we can get back above 21.5 within the next 10 days, I think that'd be a pretty good strong indicator that we may have seen the bottom here in June, and June might be the bottom before we start to see like a nice leveling off of this downward trend into maybe October, and then start to climb out towards the end of this year. That would just tell us that we're repeating the same cycle that we've seen throughout the market in the past. If we go back and look, you can see that each time we came down and touched this 50 time period moving average on the monthly chart, we ended up coming back up and having a good little rally. So back here in 19, we touched in February, and then we saw a top in the market, a recent time top in the market in mid-June. And then we fell down. We touched it again in April of 20. We formed the inverse of that candle before we started our massive climb all the way up to $65,000. And now, well, we've come down and we've touched it again. So this is where I'm kind of at. Before I talk about that, similar situation when we've touched the 200 time period moving average on the weekly. So for that, let's move on over to this chart. And this one on Bitstamp actually goes back quite a way. So I'm going to go back and show you since the start of this 200 time period moving average, every time we've kind of come down and had contact with it, we have come back up for a good run. That has been a good indicator of when to buy. So one time, let's just say one time, we won't count this time here, but back here in August of 15, we came down and touched it. Back in December of 18, February of 19, we came down and touched it before having a massive run up. And then back in March and April of 20, we came down and touched it again before we started the major run into 20. So now we have come down and we've touched the 200-day moving average, and we did close below it. We've closed below it before, especially back here this last time. We came down, we closed down below it, and that was pretty crazy. But we've never had a sustained loss below the 200-day moving average, which is my main concern, is what's going to happen if we close this next candle on the weekly chart. If we don't somehow manage to come back above, what would this be, 22.5? If we can't close this next week above 22.5, where does that leave us for the future? All we basically would have then is where were our old support levels, and we'd just be trying to, we could be in a free fall Definitely to at least $12,000 in my opinion. If we cannot retake the 200-day moving average this week, the close of this weekly candle that we're currently on, then $12,000 is imminent. If we can, I think that goes to show that we're probably going to repeat this cycle, and we could see a very good recovery. It may take a while, it may take multiple months. My kind of estimates are about October, and I get that from this chart over here. So we would be saying that we need to close above this $22,500 level this week. Not Friday, this would be by end of day Sunday on this weekly candle. And in addition to that, what we would want to see is that we break through this green line. So step one, get back above $22,500 this week, hold above there till we break through this green line here, which if we kind of say that $22,500 needs to be the bottom, let's add in a quick little line here. Let's use this ray, we'll go right about there. What we would need to see then is by roughly mid-July, we would have broken through this green line. That would be indicator number one, or actually indicator number two, that we have seen that bottom and we're starting to recover. And then by October, September, October, so mid-September, we want to see that we broke through this green line as well. So we can stay flat right here. This is basically what we need to see, is we need to see up, and then we could, hit here, come down, touch, that's fine, that's fine. We can stay in this weird little range here, draw, and we would need to see that somewhere around in there. I mean, this line here could still stay flat for quite a while. It could just go straight up, but that's definitely what we're looking at, is come up and bounce off of this green line for a while. That's definitely what I'm looking for, to see if we're at a bottom, and these would be my indicators to tell me whether or not we're at a bottom, or if we're going to see more downward pressure leading us to that $12,000 level. All right, I think that's enough with the charts. Let's move on to some of the stories. Today it's pretty boring. Most stuff has the day off because of this holiday that we are currently on. Where is not sure what's going on with this. Let's just refresh this. There we go. Yeah, so Juneteenth holiday, no indicators scheduled. We do have a bunch of the speeches by a bunch of the different Fed presidents going on. Jerome Powell on Wednesday and I believe on Thursday will be speaking on monetary policy at the House Financial Services Committee and at the Senate Banking Committee. So every time they get on, expect something to happen in the market. So yeah, just be watching out for stuff like that. If we go on over to Brave New Coin, there's not a whole lot that I'm super interested in. I'm really only got my eyes on one single event, and that is the European Blockchain Convention, which is a pretty large blockchain convention worldwide. So definitely going to be keeping my eyes open for any news coming out of the European Blockchain Convention, which starts later on this week. I believe on Friday, Saturday, and Sunday is when it will be on. And yeah, some good speakers. We've got some people from Facebook. Celsius is coming online. We got Coinbase going to be there, so lots of good, interesting companies and people going to be there speaking. So let's see, what do we got? on CoinMarketCap, the different events that could be coming up and the calendar stuff, there's not really anything at all of interest coming up. On here, we got a couple platform releases, which are nothing, like this mesh chain. I went and checked out their Twitter. They got like 20,000 followers, but like hardly any activity on their page, so nothing I'd be looking at. There's something else being released. Oh, Cloud Chat. There's a couple forks, hard forks coming up. The Einsteinium upgrade and hard fork. Komodo upgrade and hard fork. But yeah, not a ton interesting. And then let's move on over to Twitter. So we got a couple Twitter stories that have happened that I want to mention real quickly. So as of today, apparently, you can integrate your Shopify store with Crypto.com's Pay Now. So that's very interesting. And you'll get 0% fees for 1 month when you integrate by the 30th of June. So very interesting to set up crypto payments within your Shopify store. If you have a Shopify store, I would definitely recommend this. It's very cool. Something else. So South Korea is delaying its 20% tax on crypto asset gains by 2 more years until 2025. So pretty cool. Keeping that tax off. And one last Twitter thread. So Iran is to cut the electricity of all 118 legal crypto miners in the country to fight potential power shortages. They don't give a good timeline of when this might happen, but this would be crazy because if we go back, and I wanted to see how much of the hash rate that they produce for Bitcoin, and so we can go over here, and they estimates are somewhere between 4.5% to 7% of their global Bitcoin hash rate. And I wonder what that would do. So let's see here. Bitcoin hash rate. Where would that take us at if they were to drop? Man, I wonder if that was it right there. So let's see. It's peak back on June 11th. Interesting. So 205. So what is about 4 to 7%?
You're watching the Crypto Market Update with your host, Chris Marshall. You're watching the Crypto Market Update with your host, Chris Marshall. Your home for the latest crypto news, reviews, and updates that can be found around the block. If this is your first time here, then we would like to thank you for watching. If you enjoy the show, please like, subscribe, and share with anyone that you believe needs this type of content in their life. Just a reminder, anything discussed on this show is for educational and entertainment purposes only and should not be considered financial advice. With that out of the way, let's get on with the show.
It for today's show. If you found any help in this, or if you found value in this, please let me know. I think the stream may have shut off. Oh, I'm not sure what happened there. Oh, I was using my calculator and hitting some random buttons, so you guys may have dropped off there for a little bit. Those are my hotkeys right here. So if you basically, just in case you missed what I was saying there, we were taking a look at the total hash rate, and basically if you were to take that 4 to 7% out of hash rate from where we're at today, that would put us back in about January to February time, somewhere between like mid 180s to 90s, mid 190s. So somewhere in there is where our hash rate would fall back to. So I'm interested, and I will be looking to see what effect that has on the market total, to see if that drop actually does happen. So with that, that is today's show. If you found this helpful or insightful at all, please consider liking, sharing, subscribing, hitting that notification bell to get notified whenever I go live or releasing videos. I've been thinking about moving this on over to OTEC's platform, so I did create OTEC, and so I sponsor my own shit. But we have our own platform, and I've been thinking about just moving this on over to our own platform so that our members have this live and in their stuff. We have our own custom app and software for our tech group. So if you're into tech and you're in this area, even if you're a little ways out, Gainesville, wherever the Villages, you need to get connected to a tech community or an innovation community or a future thinking community, consider looking at OTEC. Love to have you. otech.mn as in Mary Nancy .co. Type that in and you will be taken to our main page. So yeah, with that, I will see you all on Friday for the crypto market recap, where we take a look at the different events that have happened throughout the week, the things both known and expected, and also the things unknown and totally unexpected. And we'll see what effect they had on the market and where we're at, where we're situated going into the weekend. So, yeah, I will see you on Friday at 4 p.m.